Morning, Market Chameleons. And there he is, King Chameleon, Dimitri Pargamonik. How you doing, Dima?
Good morning, Will. How are you?
Awesome. Let me get the disclaimer up right away. We're right at 9 o'clock. Let's go.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. We got a bunch of new people in the chat this morning. Listen, first, if you're first time, make sure you subscribe to the channel. Thumbs up are always appreciated. And just put questions in there and I'll get them over to Dimitri when he gets a free moment.
Awesome.
All right, let's go.
Thanks, Will. So I think we'll start out. We'll take a look at the pre-market report, see what's trading and moving in the pre-market hours. We'll take a look at what's coming up on the earnings front. We'll compare what the options are implying, where the straddles are pricing in the upcoming move versus historical average moves. Then we'll take a look at a couple earnings that were released and maybe read some of the press releases, see if we could get some insights into the earnings. So kind of get into the habit of looking at some of the fundamentals and how companies are communicating their future outlook to investors. With that, let's get started with the pre-market report. So these are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's take a look at higher market cap stocks to see what's going on there. I'm going to use this market cap filter. So these are stocks with a market cap of 20 billion or higher. So let's take a look at that. And on the top of the list, we got Pinterest. So they reported earnings yesterday after the market closed. They're up 10.5%. So I think I'm going to take a look at that one today. We'll open up their press release, see what they're saying in there. And the other thing I just noticed here is that on the percentage gainers list, there are 34 that made our percentage gainers list, 10 on the percentage decliners list in this category of 20 billion or higher. So from that perspective, looks like a more bullish bias towards the open than bearish. I'm going to unfilter this report quickly to see we got some, big gappers in the morning that are lower cap stocks, 126 million market cap stock here. That's up 200%. If you could open it up, look what the catalyst is behind that. JG up 124%. Again, lower market cap stocks, but they are trading a lot of shares in the pre-market hours. This one, 13.9 million shares. JG, 9.3 million shares in pre-market hours. STG trading 5 million shares in pre-market hours. Low cap stocks, which is kind of something we see every day in the morning. But if there are no questions on the pre-market movers, I'm going to go to the earnings just to cover more of the earnings and get into more detail on some of the fundamentals. Let's take a look at coming up earnings. So upcoming up earnings. And I'm going to take a look at stocks expected to report earnings in the next 2 weeks. I'm going to use this filter to look for stocks that on average trade 5,000 option contracts per day or more. So using that filter, then I'm going to open up this full report next 2 weeks. And this is the list of stocks with upcoming up earnings, and it's sorted by the earnings coming up, the most recent ones. So TTWO, that's expected to report on February 8th after the market close. The straddle, so when we talk about the straddle, you're buying a call, buying a put. So we're looking at the magnitude of the move, right? You're buying premium in either direction, so it has to move by more than that premium for you to cover those options. So here, the straddle is implying a move of 6.8%. That compares to a historical average move, what the stock moved on average up or down after reporting earnings for a 4-quarter average move, 6.9%, 12-quarter average move 6.6%. So that's kind of in line with our historical benchmarks, implied versus historical moves. High move on that 13.8% in the last 12 quarters after reporting earnings. CHGG, that's also expected February 8th after market close. Straddle right now pricing in a move of 14.2% in either direction. That's compares to a 4-quarter average move of 13.1% and a 12-quarter average move of 11.5%. So 1.1% above the 4-quarter average, 2.7% above 12-quarter average. High move on that, 32.3% in the last 12 quarters. SPG, that's also February 8th after the market close. That straddle is implying a move of 7.8% in either direction, compares to a 4-quarter average move of 1.8%, 12-quarter average move of 1.9%, high move on that 4% in the last 12 quarters. The other ones are February 9th, so I'm going to stop, but one, I just noticed Twitter, that's coming up, and I'm going to take a look at Pinterest, so they're kind of related. So I'm going to compare Pinterest and Twitter because they have some similarities there, and I'll show you what I mean. So if there are no questions on this,
we did have one earnings stock that people wanted to take a look at. We had two people ask about it. Do you want to come back to that, or
what's the stock?
It's Cisco, CSCO.
Okay. Cisco. So that's coming up February 9th. I can look at it now. Let's look at it now quickly. And as we get closer to it, we'll take another look at it. So just like a quick glance, what's going on. So we see here Cisco. Let's take a look at what Cisco did since their last reported earnings. So this is looking at it post-earnings drift. And we see here this green line that's telling us after they reported the last reported earnings, it drifted up 15.1%. Okay, so that compares to, on average, its average drift is 2.8% between earnings, and a 1 standard deviation move is 5%. So we see that's a 3 standard deviation move. So that's a pretty big drift between earnings for Cisco. You could come down here and take a look at historical. So that's where we are right now. That's the average drift, and we see 67% of the time it drifts higher, 33% lower between earnings in the last 12 quarters. So this is just letting us know, yeah, the market has gone up. So part of it is the market, and part of it is that expectations for Cisco's earnings are being built up. People are optimistic about the upcoming earnings. I'm going to take a look here how they did last time around. So this is its last reported earnings, November 12th. They reported 76 earnings per share. The estimates were 70 cents. So they beat on by 6 cents there. They're kind of in line with the revenue estimates. So they beat by 79 million, but you could see here $11.9 billion in revenue. Here's what the consensus estimates now are: 75 cents. So just compared to the second quarter of the previous year, you see here they made 77 cents. Right now the estimate's 75 cents, so more muted, right, than the last second quarter. Expected revenue 11.9 billion. I'm just going to take a look. Let's take a look what it usually does heading into earnings. So this is its history heading into earnings, day of earnings, heading out. So heading into earnings, it's like a mixed bag. It's like almost 50-50. You see it doesn't really have much appreciation going into the earnings. Day of earnings, opening gap, also close to 50-50, 58% of it. The time last 12 quarters open higher, 42% lower, average gain 0.1%. The average move heading into after reporting earnings, the average gap move up or down, right? So we're converting all the moves to positive to see the magnitude of the move, was 5.4%. That's the average gap move, with a high move of 9%, low move 2.8% at the opening. After the opening, this is what it tended to do. From the opening price to the high of the day, average move was 1.4%. From the open to the low, average move was 1.8%. So that is skewed more to the downside. So the magnitude of the down moves was higher than the magnitude of the up moves on average. From open to close, also almost 50-50, 58% of the time it drifted lower from the opening price, 42% of the time it drifted higher, for an average loss of 0.4%. Let's take a look at how the straddle compared to the actual move. So when we take a look at the option straddle, that's implying, remember, the magnitude of the move up or down. You're buying a call, buying a put. We're talking about the magnitude of the move. So these are what these bars are here. So this is what happened the last time around, November 12th, after the market closed. Cisco reported earnings. They were up 7.1%. The straddle was implying a move of 6.4% in either direction. So you could see there, if you sold that straddle day before, you would have to buy it back higher because the move exceeded the cost of that straddle to the upside. This red bar here, this is showing us the actual move to the downside relative to what the straddle was pricing. So August 12th, after the market closed, Cisco reported earnings. Next day, the stock was down 11.2% for the day, compared to the straddle implying a move of 5%. Again, if you sold that straddle, you'd have to buy back higher, losing on the sell side, making on the buy side. So this is historically the summary. If we took the last 12 quarters, half the time the straddle was overestimated the move, half the time it underestimated the move. On average, the straddle predicted a 5.2% move in either direction, compared to the realized move on average of 5.8%. So you could see here that if you're playing the long-term odds here in the last 12 quarters, that the straddle would have been profitable from the buy side because the actual realized move exceeded the expected move. So that's Cisco really quickly. Were there any specific questions on it, Will?
No, that was it. They just wanted a Dimitri rundown of the earnings going into for Cisco.
Okay. And maybe we'll take a look at it Monday again, because this is still, February 9th is the February 9th after the market closed. So I could take another look at it as we get closer. We'll take a look at the options and how the straddle prices are changing, getting closer to it. Let me take a look at the fundamentals. So we have this fair value here. So we see here right now, Cisco's trading at $47.25. We think the implied value based on historical multiples is 51. So it's close to being in line, a little bit of a discount, 7.3%. And you could kind of get a breakdown here of, the historical multiples and how we got that average. Let's move on then to Pinterest. Well, unless you have, okay. So here we see Pinterest. They reported earnings yesterday. I believe it was yesterday. So this pre-market move right now is a reaction to the earnings report. Right now, looks like in a pre-market hours, they're up 10.9% from yesterday's close. So this is where it closed. Right now, 86.3 in a pre-market, up 10.9%. If we open here, that looks like a new 52-week high to me. Yeah, so that would be a new 52-week high. Let's see, actually, let's see what it tended to do after reporting earnings. So it doesn't have a long history. So you see we have less than 12 observations here. So only 8. Doesn't have really a big history, but let's just take a look at least at the small sample that we have. Here I see the opening gap tended to open higher more often than lower. On average, gained 5.6% at the opening, but you could see here that the magnitude, if we just took the magnitude of these gaps. So converted all these to positive moves, took an average 21% up or down. So really big moves at the open. Today, 10.6. So that would be, more muted than usual. After the opening, this is what it tended to do from the open to the high of the day, gained 6.4%. From the open to the low, dropped by on average 3.6%. So that favors more of a bullish side, right? From the open to the high, the magnitudes of the moves were on average higher than from the open to the low. Okay, so you see that, Will?
Yep.
Drift from the open to the close, 71% of the time it drifted higher from the opening price, 29% lower for an average gain of 1.2%. So that's really quickly, price return distribution after reporting earnings. Let me take a look at the post earnings drift just to see what it's done there. So we see here did drift. This is today's. It drifted higher 24.5% since the previous earnings. We're up 10.9% after the report. Let me just take a look down here. And these are the historical drifts. So we could see here that prior to this earnings, it's drifted up as much as 43%, as much as 42% prior to that. So these drifts have been pretty significant, and again, they just IPO'd, right? So we don't have a long history. It's hard to get a grip on their fundamentals. But just one thing I'm noticing, my eyes are just glancing at it, and that drift was pretty good at least from the directional point of view, was pretty good at predicting the direction of the post earnings reaction, right? So this drifted higher, reported earnings, stock was higher. Here, the stock drifted lower after the report. The stock gapped lower. This one drift higher, stock was higher. So you could see here that my eyes are just glancing at it, but
yeah,
it was really good. That drift was pretty good at predicting that the earnings were either going to be good or they're going to be bad. So let's take a look at, and now since it's you could see here, it's not a long history. We don't have a lot of probably fundamentals, and it's hard to really put a valuation on this Pinterest. So I'm just going to take a look at here. So here it looks like with not a lot of data, Pinterest, based on their historical valuations, looks like it's trading at a premium, right? So 35% premium versus historicals. And again, we don't have a lot of data here, so we might want to take a look at it a little bit closer from a different perspective and start comparing it. Well, if I don't have a lot of data, there's no like 3 years, 5 years data. Earnings, we can't even really talk about their earnings because here, let's take a look at their earnings. So see a short history, earnings per share. For the most part, they were losing, and they started to eke out the last two, right? They made 2 cents, made 32 cents here, which this looks good, right? Their revenue. So this is this February 4th report. They're expecting 32 cents. They made 43 cents, beat by 11 cents. Here, the prior report, they're expecting 2 cents, made 13 cents. They beat by 11 cents. Of course, short history, they were losing money here in between, so it's hard to get a grip on their earnings. You see over here, they had really good revenue growth, top line growth. So 705 million in revenue they made this quarter, the fourth quarter, and look how it compares to the prior year's quarter, 2019 to 2014, right? They had almost $400 million in revenue last year. This year, same quarter, so quarter to quarter, 705 million. So very big growth over there, right? So at least from the revenue growth, it looks pretty good. Let me just come back to this fair value really quickly. So, right, if you're going to give it this PE, price to sales 34, which is, you know, just the price to sales alone, just to put in perspective, this isn't PE where it's a 35, where you're taking the market cap dividing it by earnings. This is the market cap divided by total revenue, which would, you know, that's saying like, if, you know, you're able to convert all your revenue, no expenses, if they were all profit, right? If they were all profit, that would take you 35 years to make back the money. So let's just see what's going on. And by the way, this isn't including yesterday's sales, right? Because yesterday's sales still need to get processed. So this is before yesterday. But I'm going to come down here and just take a look. Is it justified given it's such a high multiple? And you look at this revenue growth, all right? It's just like taking off. So that's where people are excited about, just the revenue growth and earnings going from negative, just a huge straight line up. All right, so that's where that high multiple is starting to kick in. I'm going to take a look at it from, since we don't have a history of Pinterest, let's try to make a relative comparison, right? Like, where do we think they might be making, you know, how much money are they making? And is this valuation high? Is $47 billion valuation for Pinterest high? Since we don't have good historical numbers, we're going to make a relative comparison. So I'm going to pick stocks that I think might be similar to Pinterest and try to compare their numbers. So first thing, what I want to do is say, okay, let me take a look at Pinterest from the perspective of what do I think they could convert. I'm going to go here to the payback period. Oops. So far, so I see that this is Pinterest made $2.23, right? So they made $2.23. Their gross margins are 74.5%. Out of this $2.23, now again, this is probably higher now because it's not including yesterday's numbers. But what do I think they could convert from $2.23 into net profits, right? So right now we saw, you know, I think it's going to be more than 7 cents because their gross margins are huge. So I'm going to take a look at somebody I think is closer to Pinterest, and let's take Facebook, right? And Facebook, we could take a look at Facebook. They already have an established history. How much of their revenue do they convert to net earnings, net profits, right? And I'm going to use that as my starting point. So let's take a look at, I'm going to open up a new. So right now I'm on Facebook. Let's go key ratios. So here's Facebook. These are Facebook's gross margins, very close to what we see in Pinterest. And Facebook is able to convert their 33.9% of their revenue into net profits. Okay, so let's use that as a starting point. 33.9%. If Pinterest is able to convert that into net profits, what would that equate to here? So about, 33% is what, like over 60 cents. I could put out your count. And again, I'm underestimating this right now because remember, this is not including yesterday's revenue numbers, which still has to get processed, but we saw that those revenue numbers are huge relative to history, right? So let's just say about 75 cents they could convert. Right now they're growing, right? So they're just using their earnings to grow their revenue. But in theory, let's say they're able to execute like Facebook. So let's say they could convert 75 cents of that into net profits. And what do we think they could grow? Well, we see, they got some pretty phenomenal growth. Facebook, they're growing their revenues at 23% per year. I'm sorry, earnings per share. And they're growing their revenues at 36.8. I'm going to give Pinterest a little bit better benefit of the doubt. They're growing faster. So let's say, what do we think? 40%? 40% growth? Well,
yeah, that seems like a good place to start. By the
right.
way, Dee,
Remember,
the chat is loving the fundamentals.
oh, really?
Very
Okay.
thankful of these features that you've built.
Oh, awesome. Thanks. I mean, that makes me feel good, when I hear it. So look, at 75 cents, if we're saying they're able to convert their revenue at the same way Facebook is converting it, growing at 40%, which is a little bit higher than Facebook. The payback period is 10 years. So if we take the cumulative earnings and accounting for growth to double your money, it's 10 years, which is basically in line really with what you want. If you could get 7 years, that's great. Like I try to shoot for 7, 8 years, but 10 years is not bad because right now with higher valuations, you're going to probably go out to 11, 12 years. Like I'll show you here. I'm just going to go to Facebook right now as a comparison. Again, I'm just doing rough numbers, but Facebook, if we're just using Facebook's earnings per share and their annual growth rate, 15%, you're looking at 11 years. So at least from that perspective, it's kind of in line. If remember using those assumptions, and I did underestimate the revenue. So let's take another look at Pinterest, and let's take a look at it from market cap. So $47 billion market cap. Is that justified? So I open up here. Let me come over here and say earnings per share, right? They earned $705 million last quarter. Let me compare that to Twitter. So Twitter's is kind of similar. It's a similar market cap, I think. So let's take a look at Twitter here. Oops. Sorry, guys. So here's Twitter market cap, 45.6 billion. So similar market caps, 47, 45, right? Let's see what Twitter did. And Twitter, remember, is coming up. They're coming up a little next week. So Twitter's made $936 million in revenue last quarter. Not as much in earnings per share. So close, because I'm comparing 705. They did a little bit less, but they are growing faster. Okay, so they're growing pretty quickly, and they made more earnings per share than Twitter. So Twitter made more in revenue, but didn't execute as much on earnings per share. And you could see that their growth rate from third quarter to third quarter is much lower. So not exactly, but very close. So maybe they should have close market caps. Do you see what I'm looking at, Will?
Yeah.
Comparing their revenues, how they're executing, so I'm looking at both relative revenues, the growth, and how they're able to convert their revenues to earnings per share. So even though Twitter does have a little bit more in revenue, they're not growing at the same rate from year to year as much as Pinterest, and they're not converting their revenue to net profits as well as Pinterest. Okay, so those are the kind of two differences. The other thing we could do is just open it up. We got 2 minutes to go. I'm going to try to do this quickly, guys. So let's just take a look at Pinterest. I'm going to open up their sorry, I'm going to open up their press release. This is what they've reported. And what's important is, well, how are they growing their users? So we could see here, Pinterest, they're showing you how much they grew their revenue by. And they calculate that their global monthly active users grew 37%, 459 million monthly active users, right? So that's another metric that's important to like companies like this, Pinterest, Twitter, Facebook, which are, they rely on user generated content. Let me take a look at Twitter here. I'm going to open up their press release.
These numbers are going to be interesting in Twitter because what's going to happen, they kick so many people off the platform that maybe drove some traffic. It's going to be interesting over the next couple quarters how that affects.
Yeah, they might be. Yeah, exactly. That might impact their. And I know sometimes they just clean it up because they had like some users that were like being created robotically. But just to take a look at it here, they grew their audience by 42 million in the last year. They do it a little bit differently. They, instead of monthly active users, I think DA used daily active users. So they grew by 29% to 187 million. But again, these are daily active users versus monthly. So I can't really, when you're doing monthly active users, obviously you're going to have more on those averages than daily active users, but you could see how they're growing. I don't know what this would translate to monthly active users, but obviously it would be more, right? Because you're expanding your time. But that's really quickly. It's 9:30. Just wanted to show you when you don't have a lot of numbers to look at a long history, start to make a comparative analysis of similar like products to see are we kind of in line where we think on a valuation basis we should be.
Very cool, D. Thanks for joining us, everyone. Listen, there were a couple interesting things on the chat we didn't get to today. Thanks, Goat, for mentioning VGAC is a special acquisition, a SPAC company that's merging with 23andMe. That was something I wanted to get to, but unfortunately, we only have so much time. And also the threshold list, D. They want to look at the threshold list. Maybe on Monday we can take another look at that.
Yeah. We'll come back to that one for sure.
Awesome job, D.
All right. Thanks, everyone, for joining us. Be safe. Have a good trading day. Have a great weekend, and hope to see you guys Monday.
Trade in peace, everyone. Bye.